What's going on, everybody? Welcome back to the channel. I appreciate you stopping by, spending a few minutes of your time here with me tonight. Tonight, I would like to briefly talk to you about using the daily charts in our trading system, okay? But before we really get into it, I'd like to sort of preface this video with the idea of simplicity, okay? Everything that we do is meant to simplify our process, okay? Like Stacy says, we want to bring as much certainty into an uncertain environment as is possible, okay? And that certainty is going to come from your daily process, okay? And the more simple that daily process is, the easier it is for us to precisely repeat that day in and day out, all right? So remember, like Stacy says, sometimes you're going to have to beat down that inner genius, that inner rocket scientist that wants to overly complicate everything that we're doing. All right? Remember, we are simplifying the process. So if this is a little confusing or a little complicated for you, don't even worry about it, bro. Just put it on the back burner and come back at a later date, But it shouldn't be that difficult. I have confidence that every single one of us is going to get something out of this video here, okay? So let's get into it. I'm going to give you 3 reasons of why we use the daily charts. All right? So the first reason we use the daily charts is to determine a higher time frame directional bias so we don't get caught out of position trying to counter trend the market. All right? So if we look at this chart, which is of the DJ30, by the way, you can see that we have this pump up. We are actually pumping back into the high from 2024 in December, okay? So we're back up at the high of the year level. We pump up in there and then we consolidate. Price is in a rectangle or a box, you might hear Stacy say, right? And if we zoom in, we have this sort of neckline down here, this area that has provided some support in the past, okay? And we've talked about this in other videos. When the market consolidates and we are in this sideways moving market, what a lot of people call a trading range, okay? It's not our job to predict which side this market is going to break out of, whether it's going to break out to the upside or break out to the downside. We just need to wait, be patient, and let the market show us what it's doing. And here, we break through that neckline, okay? That what was once support, we break through that. This is evidence here that this market might be breaking down, okay? So once we break that neckline, we're potentially breaking down, and we want to align ourselves with this higher time frame thesis until it's proven false, okay? Until we get a reversal or, whatever, until it's proven to be false, that we're no longer breaking down, okay? Until then, we want to align ourselves with that trend. A second reason, which is closely related to the first, is that we use these daily charts with our higher time frame directional bias to determine what type of setup we're actually going to be looking for on the day in the session that we're trading. And by this, I mean whether we're looking for buy low scenarios or sell high scenarios. So here on this Bitcoin chart, all right, it sort of is the same deal. We've pumped up, consolidated or moved sideways, and then started to break down, okay? And we break through these levels here. This is evidence that this market might be breaking down. Since we know that, we have, say, a bearish outlook on Bitcoin at the current time we're looking at the chart, we know that we should be looking for sell high opportunities that will align us with our higher time frame directional bias, okay? And if we look at this gold chart, if we look at this chart and decide, okay, we're overall bullish on this daily time frame, we should be looking for opportunities to buy low into this market in our session, okay? If the opportunity presents, We don't want to be just trying to sell this market because it's been moving higher for 3 weeks, okay? So it's been going up for 3 weeks. It has to come down, right? And we're just going to try to sell it, be a psychic, predict the high. We don't want to do that. It's much easier, it's much simpler to just look for the buy low opportunities in your session that align you with the overall trend of the higher time frame. Does that make sense? Right? Okay. Now the last reason, and maybe like the best reason we use the daily charts, okay? We're trading Stacy Burke's work. We know from the playbook we have several different signal days that alert us to a potential trading opportunity the next day. Now, if we have a basket of instruments, so you got 10, 15, 20 different instruments in your watch list, you can use the daily charts to very easily and efficiently check for signal days. You can just kind of flip through each one and say, okay, is there a first red day here? No, okay, go to the next one. Oh, okay, look, we got an inside day here. I'm going to keep my eye on that. You get what I'm saying? We can just flip through it real quick, decide which markets have our signal day, what setup we're hunting for, then we can zoom in on the lower time frame and get to work, okay? And be patient and wait for that setup to come to fruition for us, okay? Offer us an entry into the market. So I hope that stuff makes sense. To recap, we use the daily time frame to zoom out, get a good picture of the bigger picture, and figure out our higher time frame directional bias. Is this market moving up or is this market moving down? Okay? From there, we know if it's moving up, we want to align ourselves with a trend. You know, the trend is your friend, so we're looking for buy low scenarios. If the market is breaking down on the daily time frame, we know that we want to align ourselves with that trend and look for sell high scenarios in the session that we're trading, right? Okay, so that's the first two reasons. And the last reason is to efficiently check for signal days. That's going to save us some time. It's going to make it a lot more simple. You're not going to have to guess, like, is this a first red day? Is this a first green day? It'll be more clear on the daily charts, all right? Therefore, it saves you time, and time is money, okay? Now, I'll leave you with this. It's important to use the daily charts, okay? It just is. It's important. It's not going to like make you or break you per se, right? But it's important. One of the most important times I've found, one of the most impactful times that I've found to look at the daily chart is when we're nearing the end of a month and the beginning of a new month, all right? So when we get to like the last week of a month, just open up the daily charts, see where we're at, and pay attention, because a lot of the times we will get a signal day like right there at the end of the month, right at the start of the new month, or within that first week of a new month, okay? A lot of the times you will see that. Like, this is the oil chart, and I can see that we have this going on over here, this first green day here, or first green day, however you want to call it, our first red day right here, okay? And you have to use some common sense, but it sort of just makes sense, right? That like, here's the high of the previous month. Once we push back up into those levels and get that first red day right at the start of a new month, a new timing cycle, right? As Stacy always is telling you, a new timing cycle, that's when they might flip the books. You know what I'm saying? That's when this market might shift. We have this big close and breakout on that day, going back into the high of last month. Then we get our first red day, and then, yeah, see our small first red day in here, then the follow through days. So right then, at the end of a month or going into a new month, it's like a 2-week period, like the last week of a month and the first week of a new month. The daily charts can be very powerful when it comes to signal days occurring right then. All right, so that sort of is just like a pro tip that I'm going to leave you with, man. So I hope that this helps you out and makes sense of some things for you. All right, and remember, it's just supposed to simplify things. It's not the end all be all. It's not going to make you or break you. But like, looking at this month right here, for example, this was right when this market breaks through this neckline. we might be able to confirm, okay, this market is breaking down. When that happens, it breaks through there, and then this market starts coiling sideways, okay? This is a rectangle. Even though, you might not like it, this is a rectangle. We pull back. We've been making these sort of relatively equal highs. We're pulling back to where this was once support. It's now applying resistance here, right? And it's right there, right at the beginning of the new month, we get this red day. Boom. It engulfs the previous green day. Okay, there's the heavy continuation of this market that is freshly broken out of this consolidation here, this trading range, this box, this geometrical rectangle. You know what I'm saying? So right then at the beginning of new months, same thing over here, right? This market drops down, pulls back and puts in this peak high formation right here, and then starts to fall again, then pulls back, and we trade right back up into those levels and then get this massive sort of pin bar candle to the downside, right? And this, my friends, is the first red day. We actually have an inside day for the first day of that month, right? But yeah, bam, the signal day happens right there. And that's going to happen a lot of the times, okay? If you're just paying attention to where we've been, you're taking into consideration, other things, you're using your common sense, okay? You have to use your common sense to figure out where we're at, where we may be going, and all of that. And your patience, obviously. You have to wait for these things to happen. That's why we have signal days. We don't just buy or sell because we think this is the top or we think this is the bottom. No, we have a signal day. That's one whole day that has to happen. It has to open, trade all day, and close. And then it becomes the signal day. That gives us all this time to sort of think and figure things out, right? Then we have the next day where when we come to the session, we're looking for something that's very specific. And if we don't get it, we don't trade, okay? But anyway, man, before I start running off ranting and stuff like that, I hope that this helped you out. I hope it was simple enough. If you got any questions about it, drop it in the comments, bro. But until next time, I hope you continue to free